Welcome, everyone. Welcome. We're going to give about 2 minutes to let a few more people join before we go ahead and get started. We got an awesome presentation for today. I'm very excited for it. And we will start at 2 minutes on the hour. And we'll just give it about 1 more minute and then we'll kick things off. We got a ton of content here and I'm looking forward to getting into all of it. We got a few people saying hi in the chat. If anyone else wants to say hi as well, we would love to hear from you. You're welcome to also share where you're from and tell us what you're looking to get out of this webinar. Okay, we got Kina is from Jamaica. Very cool. And we got Constina from Milan and Heather from North Carolina. Hey, Heather, great to see you here. Oh, we got people from all around the world. Very cool. Super excited, and we are at 2 minutes on the hour, so we are going to go ahead and kick this off. And I am so stoked for today's session because it is on a super important topic that I wish I had known about in my career. See, for those of you who are familiar with me, you follow my content, you know that I lead an accounting firm called Mighty Digits. And one of the earliest experiences that I had in Mighty Digits was taking a company who had just raised a Series A to a process for the very first time with them implementing a departmental budget. And there were so many mistakes that I made. There were so many things that I was oblivious to. I wasn't aware of all the complexity that was going to take place and why a departmental budget was so important. And for that reason, I'm extra excited to go through all of that with you so that hopefully you don't make the same mistakes that I made when it comes time for you to prepare a departmental budget. And we're going to cover a lot of really great stuff in today's session. We're going to talk about what exactly a departmental budget is. Why do you need one? When do companies migrate from a non-departmental budget to a full departmental budget? What are some common challenges that I came across in my journey and I've seen countless other professionals come across in their journey? And then, of course, we'll go over how do you nail this departmental budget? How do you prepare one? Ideally in a way that doesn't drain your resources and really helps you deliver those insights that you can get with a departmental budget. Now, at any point, if you have a question, we have a Q&A feature, so please go ahead and just put that. There's a separate button for Q&A. Put all your questions directly in that chat. We're going to get to all of them at the very end of this session. If anything is extra relevant, though, to what I'm talking about on Payhawk's team, who I'll introduce shortly, they'll just interrupt me and we can talk all about that. But we hope to get through all the questions at the end. Just go ahead and put that in the chat. A few other areas of housekeeping. Many of you may be aware that you will be eligible for CPE credits through this webinar. There are going to be instructions we're going to be sending over after this in order to claim your CPE eligibility. And then finally, I imagine a lot of you are wondering, as with every webinar, will there be a recording? There absolutely will be a recording on this webinar. We will email that out to everyone who both attended as well as those who were not able to attend but registered. And before we kick things off, let's just do a quick intro. By way of introduction, I'll start with myself. For those of you who are already following my content, like I mentioned, you may be familiar that I am the CEO of an accounting firm called Mighty Digits. Very fun fact, on June 1st, in just about 2 weeks, we're going to turn 6 years old. I am so excited, and I have never really been in any job for 6 years. So it is going to be an exciting milestone for us. I also share finance and accounting content each and every single day across LinkedIn, across YouTube, across X, and a ton of other channels to an audience of over 400,000 followers. I'm so grateful for the opportunity each and every day for me to share all of my learnings, everything that I'm connecting with on other professionals, and hearing everyday stories from people like you on what's resonating. But on top of that, I also have a tool called Model Wiz. And just recently, about a month ago, we've released the capability where you can create a full financial model connected to your QuickBooks Online account with just one click. But it's not just me on this webinar. I am joined by an awesome team from Payhawk, specifically Robbie. Robbie, I will turn it over to you for a quick intro as well.
Thanks, Josh, and great to be here. And welcome to everyone around the world. Great to have people from everywhere, it seems. So, brief introduction to me. I'm Director of Solution Engineering at Payhawk. Payhawk, we are a spend management solution specializing in company cards, company expenses, but also AP, POs, etc. Trying to consolidate all spend or purchase ledger spend within one platform. Me individually, I'm an ACCA qualified accountant, and I'm a former sort of financial controller, head of finance, and based in the UK. My background, I used to work for a company called Hawkeye Innovation. So if you're a sports fan, the guys who do tennis line calling, cricket, football, goal line technology, VAR, etc. And yeah, as part of that, I've worked in both small and large organizations. So Hawkeye were a subsidiary of Sony, and I've worked in startups since. So yeah, the budgeting game is always an exciting one. And Josh, I'm sure your first experience wasn't that bad. Not the way you sold it anyway.
Well, there were some moments that were really bad, which I hope I can prevent with others. But from the pre-call that you and I did, you also had some really fun stories that I'm excited to get into as we kick off this webinar. So why don't we start with what exactly is a departmental budget? Now, I'm curious if anyone here has actually done a departmental budget. We're going to do a really quick poll right now, and you could just vote yes or no whether you've actually done a departmental budget before. And for me, I had the idea of what a departmental budget was. But again, going back to that journey of that company I was working with that had just raised a Series A round, the biggest thing that I heard was what got us here is not going to get us there. They used to have a budget that, for the most part, it was just me who was actually managing directly with the leadership of the company. But now that they had raised this Series A, the investors wanted a lot more granular reporting. There were a lot more people that were hired on the team, which came with the Series A. And because of that, we needed to really increase the transparency of our financial model. So we're just going to give another second or so if you haven't voted to go ahead and continue. And then I'll be curious to see the results of our poll. I'm curious how many of us have actually prepared this departmental budget before I go into the details on what a departmental budget is. So Dobrin, whenever you're ready, if you want to share the results, I'm curious how this stacks up.
Let's see who's got the scars to prove it.
There we go. Okay, so 60% of you have done a departmental budget a few times. 15% of you are doing it for the very first time. That is so exciting. And then 24% of you have never prepared a departmental budget. Well, we've talked a lot about a departmental budget is. Let's just clarify what exactly that means. A departmental budget is the process of transforming potentially an existing financial model or forecast or budget, or creating one from scratch, where instead of, like I mentioned, all that information is consolidated with just a few stakeholders, now you increase that transparency so that the department heads can collaboratively work together with the FP&A team, with the accounting team, with management, leadership, the board of directors to create this robust financial model that won't only involve inputs across the entire P&L and balance sheet, but now you have a budget specifically for sales and marketing, specifically for R&D, specifically for customer support. So this is the first time that you actually get to bring these other stakeholders into the company. So Robbie, like we spoke about earlier, you mentioned you have a ton of experience with departmental budgeting. Do you remember what one of your very first experiences in preparing one was and what it was like?
Yeah, it's always quite daunting. The first time is always quite daunting because it's a new exposure to that stakeholder management. And I think you alluded to it there, Josh, about sort of some of the drivers that drive departmental budgeting. So whether it's where investors want more analytics, whether it's where management want timely information for decisions, etc., etc. And I think it's really interesting how budgeting is so cultural to an organization. So if I take this into a Sony context, they deliberately try to create a conflict between executive management in Japan, which is where a lot of their strategy organizationally was, versus their sales and marketing offices that they had around the world. And they were deliberately trying to create management tensions there. Um, I remember one of my bosses saying in the past, forecast is like a commitment. It's like you can't miss forecast. It was that crucial. Whereas if I did this in Hawkeye, the culture was very different. It was very aspirational. It was meant to be a stretch goal, and it was all about trying to sort of predict if we're ahead of targets, what additional resources will sort of our P&Ls need in order to go there. So I really find it interesting how it's so cultural and how the stakeholder management changes depending on size and culture of the organization.
Definitely. And we're going to talk in a second about when it's common for a company to migrate to a departmental budget, because although it's very useful, it also involves a lot more work and complexity. And it's important to be aware of what you're really getting into. But one of my favorite aspects that I didn't realize would take place when I created that very first robust departmental budget is it gives you the opportunity to really expand your network and cultivate stronger relationships with leaders. I mean, these are people who are the head of a company. So for me, I was connecting with the head of sales, I was connecting with the CTO and the head of customer support. And
Yeah.
these are people who I'm still in touch with today. That's really one of my favorite parts of working in FP&A. You get to really work with some of the biggest people, whether it's management, the department heads, or the board of directors, or additional investors. And it's not just in the context of your job. This is really the rest of your career, these relationships that you'll create. But at the same time, working with other stakeholders is not a light task. There are a lot of things you need to be aware of, which we'll get into when we start talking about some of the challenges. But let's first talk about when exactly do companies typically prepare that departmental budget? And again, going back to the example of me, this company had just raised an $18 million Series A. What got us to where we were was not going to get us to where we actually needed to go. So typically, there are factors that could signal it's time to migrate to a departmental budget. If you're a company of 2 or 3 people, there really aren't any departments. It doesn't make sense to create a departmental budget. Generally, I've found in terms of company size, once a company migrates past, let's say, 40 employees or so, of course, every company is different and it can very much differ on how those departments are structured. But usually, once you actually get past 40, now you need to create this departmental budget that increases that transparency and visibility. But a lot of it could also have to do with the actual number of departments that you have. Again, if you're a 40-person company and 39 of those people are all in tech and one person is in G&A, do you really need a departmental budget? It's pretty much just the same consolidated budget. But the key thing is that as the number of people grow, as the number of departments grow, it's important to move away from the centralized place where one person controls all the narratives and instead create that visibility across each department heads so that together you can create something a lot more credible, a lot more defensible. And in order to do that, you really need to have the right systems and tools in place to be able to support this much more complex process for actually departmental budgeting. So on your end, Robbie, do you remember how it was setting up that actual process with the department heads and what changed from maybe a normal just budget without departmental splits?
Yeah, it was. So what we did in Hawkeye is we had it very much by P&L. So it was very head of tennis. It was head of sport, essentially, was the way we used to do it. And I think the biggest challenge is trying to keep people familiar or using systems that people are already familiar with. Because if you sort of attack people with a set of new spreadsheets without a huge amount of context, people tend to get quite intimidated. So a lot of it for me was trying to re-leverage a lot of my systems that I used to prepare month-end actuals and our sort of monthly rolling forecasts, and then applying that to the sort of the new situation. Because then at least you sort of have a baseline where or a common ground to work from. I think the worst thing is sort of you trying to get someone actively buying into a budget. I think is the hardest thing, and therefore you don't want to start on the wrong foot. I think uh, put it that way, but
Y-
I'm sure I'm different stakeholders adapt differently to others. So I think it was always sales and marketing. They were always the hardest ones to pin down in experience. If people have a leaderboard of their favorite functions for budgeting time, they can post that in the chat, maybe who their favorites and least favorites are.
Yeah, I'd be curious which department is the most adept in terms of using a tool like Excel and financial acumen. And I think that's actually a perfect segue into our next slide, where we're going to talk about the important factors to consider
Yeah.
with departmental budgeting. So I'm going to go through each of these in my experience, and then Robbie, I'll ask you one by one through each of these as well, what your experience has been. Again, like I mentioned earlier, going from a simple consolidated budget to now a decentralized departmental budget, while it's very helpful, it comes with a lot more complexity. And the company that I was working with, before we were even able to prepare this departmental budget, we needed to have a way in which we were able to track the spend by department, because it's not enough to just showcase where you're going in the future. If you've ever followed my content, you know the best models are ones that also show where the company has been. And I've really seen two ways in which companies do this information. Probably the most common way is a class feature. So whether you're using a full-blown ERP or if you're just using an accounting software, a class is in essence a way in which you could tag a transaction, and that'll introduce a new dimension to your financial reporting. So instead of you just running a normal profit and loss, you could filter the profit and loss for just what G&A or R&D would look like. And while classes are the most common and useful, one of the challenges that I've found with classes is A, you now need to tag all of your transactions via this new field, which will increase the time for you to do a month-end close, especially if you have to split multiple one transaction across multiple departments. But it also becomes difficult to understand what multiple periods can look like across all departments. You generally have your x-axis either showcasing the months or the departments. Being able to show both isn't really so easy when you introduce this class concept. So I see a lot of companies doing then the opposite. They'll still have one P&L, and you can see all of the periods going across on an x-axis in a traditional P&L format, but then they'll have the top portion of their chart of accounts for R&D, the next section for sales and marketing, customer support, and so forth. So it doesn't really matter which approach that you take. Each one has pros and cons. The challenge with this other approach is it's not really so easy to now strip out a P&L just for the R&D leader to help them understand what's happening. And your P&L could get pretty tall with all of these additional accounts. So whichever approach you choose, you just want to make sure you have an approach so that you can actually track that data. So I'm curious on your end, Robbie, which approach did you take? Did you do the class feature or was it a stacked P&L?
Yeah, I've done different things in different companies actually, and first time round I did it very much in the chart of accounts. Second time round I used dimensions. If we apply this to QBO, classes, locations, etc., but every accounting software sort of has this element of dimensions or custom field. Um, I think it's really dependent on a couple of things. One is the size of company, but it's also how many cuts you're expected to deliver. And I think it depends how many stakeholder reports you're trying to do. Because when I've done this sort of in sort of larger businesses, I've tended to have three different cuts, one for board reporting, one for sort of functional manager reporting, and then one for statutory. And this is where I tended to try and do the cuts by stakeholder, used to be the way I did it. Or you start doing cuts based on, I mean, Hawkeye, it was a contract by contract P&L. But I would have also done it maybe on cost types potentially as well, or revenue segments. So I, I think there's a couple of, it's like a matrix of things there, depends on how you want to report and ultimately the size of company. But what I would say is if you're in a small company, around that 40 to 50 people mark, Josh, I would say keep it simple, two dimensions max. I wouldn't go to 10 straight away.
Mm.
That's when you get into NetSuite and sort of
Mhm.
Sage Intacct or Business Central kind of world.
Makes sense. And you're right. It really it depends on the company. If anyone wants to share in the comments, do let us know. Do you utilize a class feature or do you have a stacked P&L? I always love seeing how people manage that. But this second one is it's really common and it's not just for departmental budgeting. It's also just in general financial storytelling. As you really become a leader, how do you clearly explain what is happening and what is going to happen in a business to non-financial leaders? So a perfect example, going back to that company, I was working with the head of sales and we were reviewing historically what the company was spending money on and also what the company can expect in terms of their future sales. And he looked at the revenue and he was just like confused. Like, I don't understand. Our actual ARR is so much more than what you're showing over here. And even the MRR doesn't really align with what this is. So I
Yeah.
took for granted the fact that these people, they don't have the same training that I went through, getting a master's in accounting and my CPA license and a decade in the field. They really need to be coached on how to even read and manage this information. And it's not only the financial acumen. A lot of these people don't know Excel like you do. They don't spend dozens of hours a week in a spreadsheet. This may be one of the very first times where they may even be using Google Sheets and are not familiar with all these different aspects of what you put together. So, do you remember, Robbie, having to do something similar with department heads and kind of walk back your knowledge and give them some fundamentals?
Yeah, I think you often get into a bit of a challenge around P&L basis for accounting versus cash flow because people are going to be more familiar with cash flow typically. But when you get into a P&L basis of accounting or accruals concept, you then get into the sort of revenue recognition sort of challenges that you alluded to there, Josh. So IFRS 15 or ASC
Mhm.
606 for US GAAP, that often can create quite a lot of confusion. And the other one is sort of prepayments, deferrals, if you're spreading invoices across multiple accounting periods. So what I often found was I often felt like I had to strip out the financial accounting to really try and keep it as much to a cash flow basis with departmental budgets. But then for the statutory accounting, you've the accounting standards in it. But yeah, I would try and adapt actually. I did try to strip out all the accounting fudgeries to try and make it a bit simpler to understand. But yeah, easier said than done.
Well, I think the general theme is we live in an age where there's so much information competing for your attention at so many different points in time. People can get overwhelmed and fatigued really easily. So you want to be very careful with what you present, how you present it. Expect that someone doesn't have that training and knowledge, and if they do, it'll be a nice refresher.
Less
But
is more. Less is more.
exactly, exactly. But
Yeah.
this third part, honestly, is the most dangerous part in a forecast, which again, going from my experience, I appreciate you, Robbie, saying, oh, it wasn't so bad. This is where I really almost got fired by this client. So, as you can imagine, when you're doing a departmental budget, one of the most important things you need to collect is a hiring plan. It's most
Yes.
likely going to be the biggest expense, especially when a company just raised capital. The first thing they're going to do is go out and hire a bunch of people.
Yeah.
Now, think about it. You have this huge roster of everyone on a team, and you need to share it with each department head. How are you going to do that in an efficient way? Well, I did what most people would think. I had this master table of everyone in every single department. I made a copy of the file. I deleted all of the departments other than the one that I was actually sending. I kept repeating that process and I gave each person what they needed. I double checked 100 times to make sure each person was only seeing the hiring details for their company. But what I forgot was the fact that with SharePoint and Google Sheets, there's something called version history. Now, I'm a really big believer that you should never send a physical file via email. So I always share secure links that only one person can access. But what I didn't realize was that this person was going to be able to utilize the version history, roll back the version, and see what everyone in the company was making. And I didn't find out from this department head that he did that. I found out from the CEO that that's what happened after the CEO had to spend hours on a call with him to apologize for the fact that some people were making more. it was just a total nightmare. So one really huge suggestion, if you take away one thing from this webinar, be incredibly careful with the information that you share with department owners. Do not make the same mistake that I made, especially if you're using SharePoint and Google Sheets. Make sure you're checking the version history and deleting the prior versions. Have you had a similar experience, Robbie, where you've made a mistake and shared sensitive information with others?
I've not, but I've got to say, Josh, what happened there for you is so easily done. I can imagine a few people have had that challenge before because, yeah, I think people wouldn't immediately think of version history because you've gone to such lengths of stripping out. So no, it hasn't happened to me, but good practical advice, I'd say.
For
If we
sure.
take anything away from this webinar, I think that's a key takeaway for everyone.
To wrap up this slide, then, we spoke a lot about the idea that, again, the best forecasts not only show you where you're going, but where you've been and how that gap is being bridged between both of them. Which means as you then create this forecast, your job is not done. In many ways, your job is just starting. Each and every month now, it's important to go back to these department heads and share, hey, this is what you told me was going to happen. You said you were going to hire this person. You said we were going to purchase this subscription. I'm looking at our actual P&L and we're actually off on these hours where these areas were ahead of our budget in this area and behind in this area. You want to continue giving that transparency to each of the department heads so that when it comes time to do a reforecast, they're so much stronger. They're so much more familiar with the process, and they could help you ultimately control that narrative when you get to the actual board meeting. Is that a similar approach that you've taken, Robbie, after you created departmental budgets?
Yeah, I have. And look, every budget's wrong, isn't it? I think I think we've got to
Mhm.
start from there. Every budget that you make is based on assumptions. And in Sony world, it was 6 months before the financial year would even start. So yeah, I really agree with that sort of reporting regularly aspect. I'm personally I've been very used to doing monthly reforecasting and sort of doing a 12-month rolling forecast there. I know other businesses do this quarterly, but I think that regularity of messaging is really crucial. And for the cultural reasons that I alluded to earlier, if you because the phrase that I really try to avoid is when sort of a departmental head says this is finance's budget. If you hear those words, you know you've lost or you haven't got the outcome you've wanted. And this is where I think the reporting regularly aspect and the variance analysis and the check-in is so key to driving accountability and ownership. So if you don't do the reporting regularly, I think you could hear that phrase, this is finance's budget, as soon as they overspend, and that's their first excuse. Maybe I'm too
One,
cynical. Maybe I've become too cynical already, but
well,
yeah, that's the thing to avoid.
I'm thinking of one of my clients who's a successful CFO who's sold a billion-dollar plus company in his career. And the way he shared with it, I really like. He said, you want one owner of the budget, the person responsible for making sure it all comes together, but multiple contributors, multiple stakeholders. So you're building it with the help of other people, but one person maybe is the one aggregating all that together. So in summarizing all of these challenges, again, the biggest challenge, garbage in, garbage out. If you're not able to track your data by department, you won't be able to create a departmental budget, or you will, but it'll be very disjoined with the projections and your actuals. Similarly, you want to create the mechanism in which these stakeholders now start to get the visibility, both as they're preparing that budget and after they prepare that budget, in order to see, are they hitting, are they missing, what changes they need to make? And then lastly, don't take for granted what knowledge people have, their experience and their training. Coach them, especially if that's their first time. Make sure that they're aware of how exactly they could create this budget in the right way. And that's a perfect segue into how to now prepare a departmental budget. And there are a lot of different methods that one can use in preparing a budget as a whole. I know, Robbie, when we did our pre-webinar meet, you were telling me about zero-based budgeting and other methods. Do you want to share a little bit more about your experience with that?
Yeah, I think there's lots of ways of doing budgeting. I know some organizations have this world where if you don't spend last year's budget, you lose it for next year, kind of thing, and you sort of apply inflation to what was last year. Um, something I found in small organizations, especially if you're doing budgeting for the first time, is to do zero-based budgeting, which the clue's in the name. You start from zero and you get the departmental head to justify every aspect of their spend. And I often find this a really good way of getting to sensitivity analysis, because you really then understand the assumptions associated with each sort of aspect of their budget. And I think, Josh, you said it earlier quite nicely about sort of these relationships that you build and they go through your career going forward. I would really resonate with that here. Zero-based budgeting helps with this because you actually get to learn a lot about marketing, or you get to learn a lot about sort of R&D. And it's actually, if you have that sort of intellectual curiosity, you can really learn from these experts in their field. And I think that's one of the most rewarding parts of budgeting. But yeah, so that's why I like zero-based budgeting, especially in a small organization, just because it helps with the accountability and the sensitivity kind of assumptions.
I love that. I think in my career, the first company that I started, I had these dreams that I would, hit the jackpot with it. And instead, I just became a statistic where 9 out of 10 companies fail. It took us 2 years before we failed, but it was a painful journey. And when I started working in FP&A, I was working directly with the CEOs and these department owners. And really, like you mentioned, Robbie, just seeing how they think. How are they scaling their actual department? How are they scaling their business? How are they creating a valuable piece of equity that will last throughout the ages? And again, like I mentioned, it's just that's why FP&A continues to be the favorite area for me in finance and accounting. I like to always think of my budgets as going through 5 different phases. The first phase is just creating a basic 3-statement model. Now, there's a whole debate. Should every model be a 3-statement model? What about really large companies? I won't get into that over here, but just starting with pulling in your P&L, your balance sheet, creating a basic cash flows with the indirect method, that's the very starting point for me with most of my models. The phase 2 is then going over the revenue build. And maybe you're doing that with the VP of sales. Maybe you're doing that with the CEO. It probably is a hybrid of both, especially as you do departmental budgeting. Phase 3 is then the headcount, because again, that's the biggest expense that you have in a business. And this is where you start to introduce bringing in other department heads, giving them visibility of who's on their team, who do they plan on hiring. Stage 4 is then forecasting the rest of your P&L. So we already went through revenue, we already went through headcount. What about all these other line items? And again, with your data set up properly, which we'll talk a little bit more about in our next slide, that generally becomes a breeze. Stage 5 is really just forecasting the balance sheet to be able to get to your cash flows. So regardless of which method you're actually utilizing, if you have all 5 of these down pat, whether it's a regular budget, whether it's a departmental budget, you could easily help business owners get more strategic insights out of what's happening in their business. But like we spoke about, it really starts first with the foundation. So I'm a really big believer that before you actually kick off a large project and go off to the races and you're working until midnight, you really have to take a step back and set up the proper foundation. Because generally, as you get closer to an actual due date and deliverable, the stress is really going to increase. And if you don't have a lot of the fundamentals and foundations set up in the beginning, you're going to be building on something related to quicksand. So like we spoke about earlier, before you could actually create that departmental budget, you need to be able to set up your books by department. Choose a method. Is it going to be the first time you're going to do it? A client of mine just redid their chart of accounts and redid all of 2025 based off of this new structure for the class feature, or are you going to stack your actual P&L? That to me is step 1. Step 2 involves you then working with those department owners. But again, you want to map out, how are you going to work with these department owners? Who is going to have access to what? And again, going back to the example that I made a terrible mistake, I at least was right where I clearly identified this person over here, this is their name and this is their email. They're going to get access to this specific information. They are not going to get access to that specific information. And you really want to make sure you have that dialed in so that as you're copying and pasting your emails and info requests and links, you don't potentially have a catastrophe on your hands. But you also want to ask yourself these other questions like we spoke about. What is their level of financial acumen? Is this the first time that they're actually doing this? Have they ever worked with a departmental budget before? And my favorite way to coordinate that information, once you have these two foundations in place, is to then create what's known as an intake form. So the general idea with an intake form is you'll have maybe a few tabs in your Excel file, one that shows a table of everyone who's currently on their team, one that shows potentially a pivot table of all of the vendor and transactions that make up their specific department. So now you just accomplished that first part that we spoke about. You've given people the visibility into what's currently happening in their business. Now you want to collect the information for what they think is going to happen specifically for their department. So when that happens, you'll then have a new section where they could enter in maybe a request to purchase a new software license for $20,000. Or maybe it'll be a new table where they could actually enter in their headcount for who they want to hire on their team and whether or not that'll be approved. The idea with this intake form is that you're showing them historically what is happening in their department, and you're making it very easy for them to fill out any changes that is going to happen in the future that you could roll up into your consolidated budget. And when it comes to then managing all of that information, I'm actually excited to pass it back to you, Robbie, because I think this is actually a really strong feature that Payhawk allows you to do with just your overall corporate spend. Do you want to share a little bit about that?
Yeah, of course. So with Payhawk, we will, once you've prepared your departmental budget, we can then import it into Payhawk and you see the utilization against budget in real time. And what we're trying to do is help with that accountability aspect that I mentioned earlier. So giving budget owners real-time visibility of their budget versus actual when they're approving expenses, POs, whatever it is. And it's just trying to really reinforce that sort of regularity message. Because departmental heads, they don't work to quite the same calendar as finance. Finance, I feel like month end rules the world, probably for many people on the on the webinar today. But yeah, departmental heads, they're always going to check in with budget less regularly. So giving real time visibility there.
And here's another slide that shows what that real-time visibility looks like. So how exactly does it work? I understand Payhawk allows you to distribute either new virtual credit cards, or even if they have existing credit cards with other providers, they could integrate that directly through Payhawk's platform. And then you're saying you could allocate a specific budget to each owner, and then you could track whether they're over or under their budget.
Exactly that. So the example that we give here on the screen is we're buying a new laptop. It's very expensive from Apple. And what we're trying to show the approver in real time is if you approve this, this is going to take you over budget. Watch out. So it's kind of like rather than a budget owner hearing they've overspent maybe 10 days after month end, they'll know about the problem straight away, which then gives them an opportunity to potentially fix it, or at least they've got 3 weeks to work out what their excuse is going to be. So it means at least you won't get dog ate my homework kind of level of excuses here. At least you might get some better ones, maybe.
Nice. I think of like all the technology that has exploded in the finance and accounting space. I think virtual credit cards are easily the
Yeah.
coolest. I remember the first time I was working with a client and I had to purchase something on their behalf. And historically, what would you have to do? You'd have to either call me up or you'd have to email me the credit card number, but then that credit card number may get out to someone else. I remember the client just sent me a link. It was a credit card that I got with just $100 that I could spend on this specific vendor. And I just paid for it right then and there. And we destroyed the credit card right afterwards. I don't know, but I'm curious, does Payhawk ever plan on integrating personal credit cards onto their platform? I feel like that could be so cool if like I'm on a trip with friends and I want to just give someone a quick link where they could buy something and I'll like pay for it. Has that ever come up?
It's come up, but we stick to B2B. We stick to the business credit card thing. I think for the small businesses out there, I think the advantage of cards is typically you're in a very small finance function. You might have an outsourced provider or an accounting firm. So one of the great advantages of giving cards is you decentralize spend, but you can have card limits to actually control still, but you're not having all the data entry. I often find a lot of businesses sometimes use PO systems inappropriately. I mean, I'm trying to think. I've seen some clients have a full three-way match on $100 invoice, and I'm thinking
Mhm.
that's a waste of time. Just put that on a card. Maybe anything above $1,000 or €1,000 or whatever. That's when you might need a PO. But be pragmatic with how you want to spend. And I think the real advantage to finance there is as you're removing the data entry, it gives you more time to focus on the value add. And this is where, Josh, I get to tie back into your FP&A. FP&A being the forward-looking function, helping the departmental heads with their strategy. That's what we want to drive here.
Love it. Well, we got about 5 more minutes and then we're going to jump into some questions. So if you haven't submitted a question, just go ahead and do that with our Q&A feature. But let's talk now a little bit about what happens after you prepare a departmental budget. And maybe just to expand a little bit on this prior slide. So we spoke about the idea that you set up the foundation to your data. You outline who in the company gets access to what data, and then you create intake forms that showcase where the company has been, who is currently on their team, and give them a really easy way to enter in that information to then go back into your budget. So you need a way to kind of like decouple your forecast for each department owner, collect those inputs, and then consolidate it back into that budget that most likely you and FP&A are going to be one of the very few people who get that full level visibility into. But like we spoke about, when we prepared our very first departmental budget and we had our board meeting, I thought, okay, the hard work is done. But in reality, really it was just getting started. Now we need to go back to those department heads and we need to explain what happened. You told us this was going to happen, but this is what actually took place. So you need a way where ideally you're not just designing this system where you're doing a one-time exercise to bring them those insights. Ideally, you're creating a mechanism where every month you could, again, decouple that information, put it back into that departmental owner's file to help them understand what exactly is happening in their business. In the event that you then do a reforecast, you kind of bring that back in. Now, there are a number of ways you can do it. The simplest way that I see people do is just they kind of just copy and paste information as needed. One of my favorite mechanisms, though, and I have a ton of YouTube videos on this, is utilizing Power Query, where you can create a connection to another file and you just hit refresh and it just transforms that data and sucks it back up into the consolidated file and vice versa. But there really are a number of different ways that you can do it. And as long as you get it done, as long as you're comfortable with the efficiency, that's totally fine. And this is where you'll get the opportunity, like we mentioned, you're working with the head of G&A, the head of sales, R&D, product, marketing, human resources, customer support, finance and accounting. All of these people are now part of the actual story that you're telling to leadership, to investors, and to the board of directors. And I believe we have one more slide that I'll pass over to you, Robbie, before we go over to the Q&A. Do you want to talk a little bit to this?
Yeah, I think it alludes to what I referred to earlier. It's the real time. It's that real time aspect. Because one of the risks I see in many finance functions is if you get diligent departmental owners, they'll ask finance to go, please, can you send me actuals for May, let's say. That's the diligent ones. That's not sales and marketing. They never ask. So it's and you'll have noticed in the earlier slide, marketing were the ones in red overspending as well. So this is where real-time visibility I think is really important, and that's I think a key aspect of the FP&A software that you use. Payhawk's not a full FP&A solution, but I think I think trying to give real-time visibility is crucial. I think there's yeah, I think that's the key is just it's driving accountability. Otherwise, budgets mean nothing. If it's just a finance budget, it really doesn't mean anything. So getting accountability is key.
Well said. Okay, well, now we're going to take these last 15 minutes to go over any questions. I already see 3 questions over here, and we'll get to them in order. If anyone else has a question, go ahead and just put that in the Q&A, and we'll be glad to get to them. So Marissa asks a good question. She says, how would you manage multiple departments, 10 plus, in a member society nonprofit environment where the department heads are volunteers, which means they change on a yearly basis on member elections. So first, let's talk about your first question, and that is the multiple departments, 10 plus in a nonprofit. So the general idea is the more departments that you have, the more complexity and the more work you're going to have to do. Now, it's not a one-for-one scale because, again, if you develop the right systems that can be reused, whether you have 5 or whether you have 20, it shouldn't be so much more incremental work. So I do see it common for companies to potentially have 10 different departments. It's also common for companies to have departments and then what they'll either call a division or a functional P&L area that rolls up those individual departments. So for example, you may have product, engineering, and I don't know, anything else that overall ties into R&D. And then you may have sales and marketing and go-to market, whatever that rolls up to sales and marketing as
Yeah.
such. So I think that answers the first part of your question. And then in terms of the second part, look, if the department heads are changing each year, I don't know how much more complex it would be in terms of the infrastructure of how you manage this process. But you yourself need to be prepared for going through this cycle from start to end with all these new department owners. So maybe you want to create a video instead that walks people through with demo data, how exactly to update these intake forms, how to understand where the company has been historically. I don't know if it necessarily matters so much if they change, but it could add a little bit more work and more relationship building. Do you want to add anything to that, Robbie?
Yeah, I'll add a couple of comments. Normally, a lot of budget owner turnover means that the budget process is more top down. So it means that you're using a budget to control these people rather than it being as bottom up as we've alluded to in this. The other thing I'll say for not-for-profits, especially if you move into sort of a charity sort of sector as well, is you can get sort of caught by restricted and unrestricted funds. Maybe that's not applicable in the case not-for-profit versus charity, but sometimes that leads to very specific project budgets as well. So something just to watch out for there. Charity or not-for-profits often have a little bit of extra complexity sometimes, depending on sort of the structure of the business. Or
Yeah, it's interesting
not-for-profit.
because I just think of another non-for-profit I once worked with where we were going through this exact exercise. So Marissa, I guess it's extra common for non-for-profits to do that. So thanks for your question and hope that answers it. Okay, we then have a question from an anonymous caller. What is the difference between oh, I'm sorry, we have another one before that. Can you explain stacked income statement you referred to? Is it just a new word for budget versus actuals presentation? What other ways are there? So maybe this would help if I go back to slide 11 over here. So this is the way a traditional profit and loss looks like. You have your income, your cost of goods sold, your expenses, and then each and every account inside your actual profit and loss. In this case, you can't really tell what department each line item lies in. Now, maybe you want to take advertising and marketing and saying that's 100% going to sales and marketing, and bank charges and fees goes 100% to G&A. But conferences and events, well, maybe the CTO is going to a conference, maybe the head of customer support is going to a conference. You want to now understand what are your expenses for each department for this specific GL account or chart of account line item. So there are two different ways you can do that. The first way, like we spoke about, is where you actually have a class feature. So you'll still just see a P&L that looks like this, but now you can tag each transaction so that when you run a filter, you'll be able to see conferences and events specifically for R&D versus sales and marketing versus customer support. Some people don't want to do that approach. They want to be able to see all the information in one view. So under expenses, they'll have a new section called research and development. And they'll have each and every line item as it relates to research and development. Then the next section, they'll have customer support, and they'll have each and every line item for customer support. So that's what I call a stacked P&L, where it's not utilizing a class. It's just an extra long P&L that goes from R&D to G&A to sales and marketing and so forth. Do you have anything to add to that, Robert, or should we go to our next question?
All I'd say is when you do a stacked income statement or stacked P&L, you often get creative with your numbering logics. I mean, this is real operator level here, but I tended to do for every 1,000 in the cost lines, that was the department split. So for example, you've got 60,100. I would have done 61,100 is the sales costs,
Mm.
62,100 is the marketing. So you can have multiple GLs by department. But yeah, the stacked income statement often leads to you being a bit OCD about numbering logics. Yeah, I like how you've numbered it because it would map to a set of stat accounts here, Josh. So I have appreciated that accountant to accountant, I've got to say.
Nice. All right, we got another anonymous caller. What is the difference between a budget and a forecast? And this is another heated debate that I'm going to share my opinion on. Some people may agree with me. Some people may say, Josh, you have no idea what you're talking about. To me, a budget, a forecast, people really just use that term interchangeably. The same thing with a pro forma, the same thing with a financial model. Yes, some organizations may be very insistent. No, no, no. Budget means you get a specific amount of money and you have to either spend that money or you use it. Whereas a forecast is more theoretical and can relate to a full year versus a long range. I personally think that they really are all just the same, though some companies can have different nuances when they refer to it. I'm curious what you think about that, Robbie.
Yeah, I said a budget's always wrong at the start. So I'm not a huge fan of the it's fixed, it's fixed, it's fixed. I think you need to be flexible. Something I've done, I mean, not as much with departmental heads. I mean, this is what I would do at board reporting level, is I would show three different scenarios, and then maybe on a after Q1 or Q2, you may do a re-budget which then is based on sort of more recent assumptions. But that wouldn't take away from a monthly reforecast, I think. But I'm not a huge fan of budget is budget because I think budgets are always wrong and they're often prepared so far in advance of the financial year. Circumstances change. But I also recognize that, like in a not for profit case, that may need to be the case with if you've got changing budget owners quite a lot of the time. So yeah, I think I'm going to sit on the fence and be it like any good accountant and say it depends. But um, for me personally, I think you need flexibility more often than not. So if I was going to lean, it would be flexible with budgets and forecasts because I think you need to sort of you need to adapt to changing circumstances, especially with current sort of situations globally today.
Nice. Well, we got 7 more minutes. I think we still can get through all these questions. A lot of really great ones I'm excited for. But now is your final chance to post those questions because we may not be able to get to any others. So Geraldo asked, what tools or applications do you recommend to collect, track, and share budget data with departments? Now, I am a little bit biased because our tool ModelWiz integrates fully in Excel, and I'm just a huge believer that Excel is the most important tool. Now, it shouldn't be the only tool. I think there are a lot of other really great platforms out there that make the actual collection process a lot more simplified. I don't know much information about these tools. I will just say, whatever tool you use, you do need it, in my opinion, to integrate with Excel because it's easily the most popular tool for business that everyone understands. And especially like investors, board of directors, they all just want to see an actual Excel file.
Excel gives you flexibility, and that's the thing. Budgeting is often something that changes quite a lot, and there's it's not just a number and it's fixed. You often have to change the number, and that's where
Mhm.
sort of flexibility that Excel gives you is quite beneficial, especially when you're negotiating line by line and you're trying to cut someone's budget by 50%. Maybe. It's a
Okay,
game.
Amr has a question. How do you integrate an expense management system which support and departmental budget with a typical ERP aiming to reduce manual workflows? Maybe this is a better question for you, Robbie. I'm not fully clear on the question. Maybe you are familiar.
Yeah, I think you've got to be conscious what costs are going through that expense management system because the full budget isn't all going to be going through your expense management system. So I think you've got to be really clear on what you need to strip out. So payroll's not going to be going through there. Probably a lot of your PO spend, etc., etc. So I think it's not. I think that's the clear thing to have in your mind. What spend is going through what system, and therefore where can you drive the accountability? And that would be my practical advice. Once you have a budget, and then how you put that in other tools, you've got to be very conscious of what needs to be stripped out.
Cool. Thank you for that. All right. Mena now has a question. How do you ensure alignment between sales and finance? Sales usually shows unreal forecasts from their own calculations in monthly commercial meetings, especially with no system to have one source of data. Do you want to
Sales
take
are at
that
the
one,
bottom of
Robbie?
the leaderboard there. They're at the bottom of that leaderboard, aren't they? Yeah, go on, Josh.
I don't know if I really have much to share other than the idea that, again, sales may not be looking at the same information you're looking at. They may be looking at Salesforce or their CRM that showcases book deals, their upcoming pipeline, whereas you're looking more at gap revenue and other items that could differ. So I think it goes into Abdul's question that I think is relevant that I want to also bring up. What happens when department heads present expenses so high you never anticipated in your original financial model? Do you usually discuss with the heads beforehand what their expenses should look like before sharing the templates with them? So I think that ties into your question, Minna. And the general idea is just because you're collecting an intake form from a department owner doesn't mean it's going to be approved. And what's nice is you could kind of do this like good cop, bad cop situation where you're the good cop, you're working with department heads. Oh, thank you. Oh, I hope you get what you want. Then you go to leadership and you say, hey, this is what they're looking for. Can we really support a hire at $600,000 a year? And you then kind of go back, listen, I wanted to get this approved, but unfortunately it wasn't able to. So the short answer to both of these questions is just because someone requests it doesn't mean that it needs to be approved. Do you have anything to add to that, Robbie?
Yeah, I always find sales the tricky one because I think the question I always liked asking a VP of sales or your head of sales is like, okay, let's start from the real number. Let's start from the truth. Then we can work out what we're going to tell management, but let's start with the truth. Okay, now, so we've started, this is the baseline. What do you think is likely to come in? And what is best case? And I think that was my approach with sales, purely just because the sales number is always notoriously a bit iffy. And therefore, I think the more context you can share with management, the better, so that you don't lose full credibility. Because as soon as the sales leader loses credibility when speaking with management, that's when you get real tension on reports, whose number's right, whose number's wrong. So I think the more context you can get about sort of baseline, likely, and then best case, I think the more context you can share, often that relationship gets better.
Nice. I think that also ties into our final question from Katie, who asks, what are your suggestions for the budget review phase during which you may need to negotiate with the department heads on some of their budget line items or amounts? I'm an ops director who has high-level insight into each department and function, but not necessarily the day-to-day knowledge required to build a budget. I fear the department heads will pull the "you don't know what we need" card and push back on any questioned line item amounts. It's a very fair point, Katie. And again, the key in building a departmental budget is you don't know as much as these department heads know. They know a lot more than you. I've seen companies approach this in two ways, building on what we just shared. You may go to them saying, hey, you have the opportunity to add X amount of dollars to spend or Y amount of hires in this different periods, and they work backwards from there. Alternatively, you could collect that information and, like we mentioned, go back to leadership, get that approval, confirmed whether it's approved or not. Many times I go back to department heads and I explain, hey, right now it hasn't been approved, and they just understand. And ideally, it doesn't come from you. It's, hey, I tried to work with you, but unfortunately, leadership, this is what they said. Before we wrap things up, Robbie, you have anything to add to Katie's question?
Nope, don't think so. I think you answered it perfectly.
Awesome. Cool. Well, this was such a fun webinar. A huge, huge thanks to Payhawk for sponsoring this and bringing this all together. If you guys haven't checked out their platform, I definitely suggest that you do because it's a very unique platform that allows you to keep your actual current credit cards while still utilizing this modern spend technology that has really erupted over these last number of years. And like I was sharing earlier with that client, the mistakes that I made in preparing that departmental budget, the fact that there were so many things I was naive about, the story does have a happy ending. They are my oldest client as we turn 6. They've been working with me, I think now for about 5.5 of those years. They're also one of my favorite clients out there. I've met with the CEO and the co-founder, and it just continues to be a great experience. So if you make a mistake in the departmental budgeting process, don't worry. You have the rest of your career ahead of you, and most people are forgiving of mistakes as long as you don't repeat them. So thanks again, everyone who joined. This was such a fun session. I really enjoyed it, and I look forward to seeing you guys at the next webinar.
Enjoy the
Take care,
budgeting game.
everyone.
Thanks, everyone.
Thank you, Ravi.